Back with earnings preview right here on ET Now, and as we step into FY19, the clamour for an earnings recovery only becoming louder. We're trying to decipher whether or not we can see an earnings revival come in after the long wait of 3 years that we've seen, which really characterized muted earnings performance from largely all of the sectors. With our three special guests, Sanjeev Bhasin, as well as Hemang Jani and Ajay Srivastav. Now, before the break, we just discussed various sectors. Let's discuss what we can expect from the larger universe: metals, oil and gas, consumption as a theme. And Sanjeev, let me start off with metals with you. What is in store for this entire sector? Given the kind of run-up that you've already seen in the stocks, would you say that there's another quarter of strong performance that we can expect? And if so, what about the valuations that most of these stocks are quoting at? What is it that you do if they do deliver at par with the polls?
Yeah, so Aisha, I think the ferrous stocks, particularly the steel ones, will come out with very strong numbers. You've seen in the last 3 quarters, EBITDA per ton for Tata Steel being at the highest at I don't know how many years. And I think that is going to continue, given that iron ore prices have also been lower. So for us, it will be Tata Steel which can be outperformed. But I will be also pleasantly surprised by JSW and SAIL, where a lot of cost initiatives will see stronger numbers. On the non-ferrous side, I think Hindalco, Nalco and Vedanta, again the combination of copper, aluminium being in a strong zone will see very, very good numbers. So I think metals as a whole, you've seen a decent correction from the recent highs on the back that the dollar got stronger, and that is a volatile sector. But I think given Trump's protectionism and the global price charts, it still tells us that the second half can be equally impressive for a lot of the metal counters.
Ajay, since you mentioned oil and gas earlier, would inventory gains from higher crude make up for subdued GRMs now that we're already at 70?
Well, one doesn't know the mechanics of this pricing, because oil is not only ONGC, it's also the retail marketing companies. So, that's a complex web to look at it. But the way I look at it is that I think this quarter at least, the price increase have lagged the purchase price. That's one. Number two is the benefit of the opening inventory perhaps is over at this point of time, or maybe marginally effect of that one will come through, but not too much of it. So I do not know whether the oil marketing companies would get the same upside as the oil production companies.
The other leg of the market, which you track very closely, Ajay, consumption, and a bunch of names in there, from a Britannia to Pidilite, Nestle, Page, Colgate, your favorite liquor stocks, UBL, USL. Can one expect a strong earnings from them?
Yeah, I think we are, of course, for disclosure, we invested in most of the stocks in the consumer space, whether it's Britannia, whether it's Bata, and I think their numbers would be fantastically good numbers. And we are very clear on that part that not only they will give you a surprise on the upside on the total increase in profits, but also the margins will go up in our view, because the competition has been much less, the growth has been good, they have been able to push in volumes, price pressure has been much less, so price increases have come through. So across the board of the consumer space, you will find that this quarter is going to be one of the typical turnaround quarters which happen once in a while in the industry. I think the market has sensed it. The share price have gone up in the last quarter quite appreciably. So, there may not be much price upside left, but result-wise, I think this will substantiate the customer's preference to have invested a lot of money in these sectors. So if you're left behind, you better invest it. If you're there, I think enjoy the ride. But I would believe that the good part of the price and the increase and the sales increase, the margin increase, is already built into the share price of most of these companies.
Although today was a big reversal in OMCs, what with the crackdown really coming in now that we are at 70. And as we speak right now, Brent is already hovering at 72 after Donald Trump's tweet of an attack on Syria, almost a challenge to Russia. But Hemang, after 4 quarters of a decline, can we finally expect some EBITDA growth for pharmaceuticals?
Well, Aisha, it's going to be a tough quarter for the pharma universe per se, because we've also seen about 4% rupee appreciation against the dollar, and that would also play some kind of a spoil spot for the pharma universe, and particularly for the large pharma companies like Sun Pharma, Lupin, Dr. Reddy's, where the US business still constitutes almost about 40% plus. The overall environment continues to be quite challenging. both in terms of volume and pricing. So no real big respite come through in terms of the performance. However, some of the companies like maybe Biocon, Cipla, and some of the other mid-cap companies which are not focusing on the US markets may actually come out with a relatively better set of numbers. So we would be actually positioned to really buy into some of those companies like maybe Cipla or a Biocon or a Natco Pharma, where we think that numbers would be much better. Having said that, we also have to reckon that a large part of the PE de-rating for the large companies also is over. So even if the numbers are not up to the mark, we do not expect a significant correction in the large names. In fact, we've seen a decent amount of bump up in stocks like Lupin and Sun Pharma. So, there may not be an incremental price damage, but I think the operating performance would take some more time to come through in the numbers.
Right. Sanjeev, what about telecom? And when it comes to the listed universe, do you think they'll continue to report losses and all the massive share of earnings would continue to be with the big daddy Reliance Jio?
Surely, I think the price pressures continue to hurt. The recent price rises are going to hurt the ARPUs. There's a huge overhang of debt on both Idea and Bharti. And I think there is talk that at least for the first time in many years or quarters, Bharti will report a loss. The stock is indicative of that. You've seen a sharp correction of over 30% from the recent highs. And I see no let up in that. I also don't see how Jio's ARPUs can extend any rally. That's something which has been defying logic, because the pressure is on everyone. It's not that they could maintain that. So I think it's telecom would be in a weak spot at least for the next 2 quarters.
Okay. What about infrastructure, Sanjeev, and cap goods? Considering the kind of order flow that we've seen in just the last 3 months or even the months before that, do you think that can translate and materially so into earnings?
A very bright spot. Now, we will have to see the language, whether it's going to correlate into this quarter or the next 2 quarters. But, the likes of IRB Infra on the road side, Sadbhav Engineering, Dilip Buildcon, the L&Ts of the world. We've seen NBCC. These are construction companies where we've seen order inflows at the best levels we've seen in many years. And I would say that execution will be the key. You would also have to take this with a pinch of salt that companies like Thermax, which are a very, very big indicator of revival in the manufacturing sector. Thermax is the largest maker of boilers. That has told you that their order inflows this quarter is the strongest they've had in the last 18 quarters, both locally and in the Middle East. And the conduit of oil being at 65 and 70 will bode very good news for the likes of L&T and Thermax.
Ajay, finally, are you expecting any outliers this quarter and dark horses that you think could surprise on the upside perhaps?
I think the dark horse that we believe should come out will be, I think, L&T. That's one dark horse which is called infrastructure, because that's a composite story. It's got L&T Finance, L&T Infotech, L&T IT Services, and L&T itself. I believe that could surprise us on the upside in this quarter. That's one big one which can come through. The second one which can surprise you on this quarter perhaps is going to be ICICI Bank, because there is a battle of survival happening there. And if I were the CEO and MD, I would pull out all stops to ensure that I have a stellar performance coming on this quarter. They will book some profits of ICICI Securities. So 2 dark horses in my view are going to be L&T and ICICI Bank. They could really surprise the investors.
Okay, Ajay, Sanjeev, Hemang, all of you, thanks so much for really analyzing what we can expect from Q4. Soon, we're going to officially kickstart the earnings, and let's see which way the balance actually tilts. Seems like a revival could very much be in the pipeline. We'll wrap it up then on this special edition of Earnings Preview with ET Now.